Hi, this is Zak Mir, editor of Spreadbet magazine. I'm looking at a couple of major markets for September, starting off with pound dollar, where you can see that since March there's been a rising trend channel that I've drawn in with the base around $1.52, and the top going up to 159. A rather ragged progression to the upside. I think that a lot of people are obviously expecting sterling to be rather weaker than it has been. We had a key failure here in June at the 200-day moving average around 158, and normally you'd expect that to have had further traction on the downside. Sharp bear trap back above the 150 level, old May support, and then a ragged progression again since the beginning of July. And really the message here is one of bullishness, although obviously volatility. What I like about the setup here at the moment is the way that we've broken the 200-day moving average. It's at 154.90, come back and tested it as support, and then rallied again. And I regard this as really a flag, a V-shaped flag, which they can be very, very bullish indeed. And so the minimum here really should be towards 159 during September. Above that, and this is a market that I think could rocket, given how much effort it has made to make sure that anybody who's long of it would have been stopped out on these pullbacks. So a very constructive picture here. Extended RSI support line as well, and I think 159 at the least, and probably back up towards 160, 165, which is the sort of 1 year resistance going into the autumn. Now on to gold, where I think I'm sort of fortunate that I've waited a few days into September after the non-farm payrolls and after the alleged peace moves in Syria. Current position here is that I would prefer it if it had been making a call on this market at the beginning of July or August, where as you can see, the start of the month in both of those months was a dip to buy into. The same may be the case for September. We have pulled back to sort of around the late, so the middle August support zone, 1350, 1360 today. But really, it's a sort of you'd want to see further evidence of bullishness before buying. The favoured trigger at the moment would probably be an end of day close above the 10-day moving average at 1392, or the 20-day at 1384. But really, you want to see strength. Otherwise, there's a risk that the falling 200-day moving average and the general downtrend that we've had over the past couple of years would win the day. So looking for a buy trigger here, and in the meantime there's a risk of, say, the 50-day moving average again at 1331, or perhaps even below $1,300 before this market gets back up on the bull tack again. So a difficult situation for gold. We have the factors, the fundamental factors, obviously, as I said, as the Syria situation, which if it becomes more likely there's an attack, then gold would be stronger. And also, if the Fed doesn't taper QE later this month, then you would probably expect a gold to shoot up quite strongly as well. So if pushed, probably I would say we're heading higher, but only above the 50-day moving average at 1331. That's it for this month. Another couple of markets for October.